Welcome to Prime Q&A. Now that there are many NFOs coming up, you're probably wondering if you should be investing in them. We've received a lot of questions on whether you should invest in these NFOs. For example, the new Parikh Conservative Hybrid NFO, does it make a good investment?
Okay, so let's step back a little bit. Let's not look at the fund only. Let's look at what an NFO is. Okay, it is a fund that has got no portfolio still, that is coming into the market to collect money from you, and then it is going to deploy it. Okay, so the first point that you need to remember in an NFO is that it is not cheap. Because the NAV is at rupees 10 does not make it a cheap NFO. Right? NAVs in mutual funds don't matter. Let's get that first thing out of your mind. Now, in a mutual fund, you can't predict returns. All right? You can. Why do we say a fund is good or a fund is not? By looking at its past performance, which gives us the ability to understand how well the fund is able to navigate different market cycles, how well it has been able to beat or how consistently it has been able to beat its index, beat other funds, what strategy it is using to identify stocks or debt securities, or as the case may be, how consistent that strategy is, whether that strategy is one that can sustain for longer periods. Okay, so all that is what we find out from the past performance. Past performance also tells us the nature of a fund's returns. Is it good at containing downsides? Is it high return, high volatile? Is it good at performing only in upsides? Okay, all this you will understand only once you watch a fund to understand what its strategy is. Okay, that gives the comfort to say that a fund is good and it can continue to perform, or a fund has not been able to perform and therefore, you should be careful if you have to invest in it. Okay. In an NFO, and knowing all the strategy, the nature of funds that is important, because then you will be able to build a diversified portfolio. You will be able to find funds that suit your requirement, your risk profile, what you want. Like if you're a conservative investor, for example, and you do not like seeing your funds, then you cannot go for a fund which is high volatile. You cannot go for a fund that is unable to contain downsides. Such funds. Okay. So strategy, consistency and performance, all this matters when you invest in a fund. In an NFO, you do not know this. Okay, so the first question that you need to ask before you try even and see whether a fund NFO is good or not, the first question you need to ask is, does this fund need you to watch its performance or watch its strategy? If yes, if it is necessary that you know what strategy it follows, if it is necessary that you know how it is going to navigate market cycles, you need to watch its performance, then you should not be looking at that NFO at all. You should give it time to perform to even understand what you're getting into. In an NFO, so unless you know this, you don't know what you're getting into, right? So where you do not have this information, it is best not to look at an NFO. You can have, say, for example, passive funds, right, which are built on an index. In such cases, you have that past performance. Or if it is a fund that is investing in another fund, say it's an FOF or something like that, then you have that underlying investment for you to evaluate. So when it's cases like this, then you can see whether there is merit in that NFO or not. Okay, so that is the first aspect. The second aspect, which is also equally important, is what this NFO offers. Is it something new? See, we have over the years so many mutual funds in debt and equity, hybrid, everything, right? So there are already so many strategies, so many different strategies, so many different types of funds that are there. So you already have enough variety. Okay. So is this new fund going to offer something different? If there is an alternative that is already there, like if there is another fund that does the same thing, and this existing fund has a good track record, it is already a good performer, it is a consistent performer, then it is better that you go with the established fund and not the NFO. Because the NFO is not going to do anything different. It is not offering you an opportunity that is not there. So already, as we explained in the previous point, you don't know what you're getting into in an NFO because you don't know what it's going to do. So when you already have an established fund that is offering to do something similar and that fund is good, then you should stick with the known entity. You shouldn't go behind something that you have no clue how it's going to perform. So unless that fund is truly offering something that is not already there in the market, then it's best to skip it. If it is offering something good, something different, a good diversification for your portfolio, or if it is something that requires timing, then you can evaluate it for its merits and then you can consider whether or not you should invest in it. But as long as that doesn't happen, as long as you already have funds that are doing the same thing, it's best to go for the existing funds and wait for this NFO to at least have some record in what it's doing. Okay, that is the next question that you need to see. Is it doing something else? The next question that you need to see is, do you actually need this NFO? Does your portfolio the fund? Okay, just remember that the more funds you keep having, the more funds you keep holding, the more difficult it is for you to manage that portfolio. When you have too many funds, it can lead to over diversification. So if you have too many funds, there is no real diversification benefit that you're getting. You're spread across too thin, so no individual fund is going to do anything for your portfolio. So if you already have a large number of funds, there is no benefit in you keep adding more and more to it. So see whether you actually need to have yet another fund in your portfolio, even if it is offering something different. If you already have a proper diversified portfolio with a good number of funds, adding an NFO is not going to help. Okay. And before you think you can redeem some amount from one fund and then put it in another fund, please don't try that. If you already have good quality funds, continue to stay invested in that. Don't redeem from a good fund to put it in an NFO. If you have surplus money, then you can consider an NFO, but don't take money out of a good fund and put it in that. If it's a poor performing fund and you want to rebalance your portfolio or you want to review your portfolio, then it's a different question. But always see whether the NFO is going to add any benefit to your portfolio. Okay, that is the third thing that you need to see. So first, is the NFO something where you need to watch the performance? In most cases, it will be yes. Okay, if it's an equity fund, debt fund, you need to know how it's going to manage different cycles. 2, is there already an established alternative there? If there is, then it's best that you go for the alternative and not for the NFO, because you. And the third is whether the NFO actually adds value to your portfolio. If it already has too many funds, it's best not to keep increasing that. Okay, so that is on NFOs in general. We have written a detailed article on it, so I'd suggest you read that. We give a lot of examples and explain what exactly we mean by all these points. Parag Parikh's conservative hybrid NFO in context of these points. Okay, take the first point, the fund strategy. We do not know at this time what exact strategy the fund is going to follow. How it's going to manage duration? How is it going to change its portfolio based on the rate cycle? Whether it's able to call those rate cycles correctly or not, because we have seen funds in the past going wrong on those rate cycle calls, and that has hurt performance for a very long time. So we need time to see exactly how that fund is managing the debt portion. And this is something that is common for all conservative hybrid funds, where the debt portion managing is very dynamic and very unpredictable. So in such a situation, you need the time to understand. Similarly, we also have to see how it is managing, if it does managing the allocation between equity and debt. Is it changing? How is it managing equity, right? So we don't know all of that. We need time to see all of that. So it needs watching. Okay, that's the first point. Now take the second point. Are there established alternatives? Yes, because it's not the first conservative hybrid fund that is there. We already have, there are funds in that category which have been around for a long time. So, it's not offering anything different. And you also have to take a step back and see whether conservative hybrid is even necessary for your portfolio, right? It's not a category that is very useful for most portfolios. So based on these points, you can wait and watch, because like we said, Parag Parikh has a good pedigree. The AMC is not an AMC that is very prolific in making multiple fund offers and all that. Its equity funds are very good. So it has that quality. The AMC itself has that quality. So give the fund a bit of time to see whether that reflects in this fund also, and then we can take a call. At this time, there's not enough information to see whether the fund is worth investing in or not. So bottom line, NFOs, just because there is an NFO, don't immediately jump for it. Okay, in most cases, it is simply another fund that is now available for investment. Just because as an NFO doesn't make it special. So always take a step back, see whether it's something that you need to watch, see whether there are other alternatives, see whether you even need it. Then you look at whether or not an NFO should be invested in or not.
Thank you for that detailed explanation, ma'am. I will link the article in the description below. Also, let us know what you think of that video in the comments. If you have another question, again, ask us in the comments and we will answer them. Bye for now.